Good evening, everyone, and welcome to Price Action Trading School. Today's class is Murrey Math. So, class is in session and get ready. Online educational materials that are available at Admiral Markets Estonia for a global audience. So, take into consideration the information is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And by logging into your trader's room, you will be able to download Admiral Market Supreme Edition. And if you're not able to trade from your platform, there is also a web trader that will allow you to trade directly from the web. Don't forget that you're officially trading with Best MT4 broker. So Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and this webinar is for informational and educational purposes only. Murrey Math today we will talk about Murrey Math principles, core elements, and Murrey Math patterns. Aleph is asking, what is Murrey Math? Is it a theory like Fibonacci? It is a complex set of support and resistance levels that act more or less the same as pivot point, but also they provide some insights whether a price should continue or it should reject. So that is, let's say, a form of pivot point with set of its own principles. So first of all, we need to say that one of the main principles of Murrey Math is that markets behave similarly. So the main assumption in Murrey Math is that all markets behave in the same manner, okay? Because all markets are traded by a mob, and hence they have similar characteristics. The Murrey Math is based upon the observations that were made by Mr. Gann in the first half of 20th century. And great contribution to Gann's theory made Mr. Murrey himself, and he created a system of geometry that can be used to describe market price movements in time. So that geometry facilitates the use of Gann's trading techniques. Okay. Now, Murrey Math geometry is very elegant in its simplicity, and Mr. Murrey says that that is a perfect mathematical fractal trading system. Basically, these are the main things, the core elements of Murrey Math. So Gann believed that the entity, a pair or stock, has its own price movement, and that price movement will be retraced in multiples of 1/8, 2/8, all the way up to 8/8. So if a stock moved up 4 points, Gann believed that the price of the stock would reverse and decline in half of the point, that is 4 to 8 increments. And that means 1/2, 2 and 2, 3 2, 4 2, 5 2, 6 2, and so on. Now, since price moves in 1/8, Murrey Math divides prices into 1/8 intervals. So Murrey Math consists of before mentioned octaves. We have different levels in Murrey Math. We have levels from 0/8 to 8/8, and those octaves are, simply put, support and resistance levels where we can determine the next movement of the price. That is the rhythm, and we have so-called constant price range. So price tends to range between those intervals. Now, the thing is, if the price gets out of the rhythm, basically it goes into overshot. So we call it simply that we say market has overshot. So if the price goes below 0.8, we have minus 1.8, and below minus 1.8 is minus 2.8. Same as for above 8.8. If the market price goes above 8.8, it will magnetically be pulled towards plus 1.8, and same as above 1.8. We have 2.8. So market has overshot. This is how it looks like. Extreme overshoot happens at plus 2.8, and extreme overshoot to the downside goes at minus 2.8. So these are main levels from 0.8 to 8.8. Okay, so these are main levels. As soon as the price goes here, market is outside of equilibrium, outside of the rhythm, and if it breaks 2.8 or minus 2.8 extreme overshoot levels, it will create a new set of octaves. Murrey math instructs us to divide the value of support and resistance into 1/8. Murrey refers to major, minor, and baby Murrey math lines. So all of these lines has some sort of default price movement if the price hits it. Murrey abbreviates the term Murrey math lines as MML. So Murrey math for this webinar is MM, and Murray math lines are MML. Okay, so remember this, as long as the price is within 0.8 and 8.8, it's in the rhythm. As soon as the price breaks overshots 2.8 or minus 2.8, price goes out of the rhythm and new set of octaves will print. Mind you, however, that if the price moves beyond 0.8 or below minus 0.8, then the 95% of the time it will reverse when it hits plus 2.8 or minus 2.8. Because here and above, market is already in overbought territory, or here, market is already in oversold territory. So the price will probably reverse at its extremes, and those are plus 2.8 and minus 2.8. Okay, in my opinion, Murrey math is one of the best support and resistance indicators. I need to say definitely one of the best, because it perfectly follows with the price. But of course, as with all other support and resistance indicators, you cannot trade it just by itself. You need to have some additional filters. But Murrey math has its own rules that could be implemented into both price action system methods and indicator-based systems. Now, by default, we have these settings. P setting is period in bars on which the lines will be calculated. By default, it's 64. Period is, of course, you can put it by yourself. A default is 40 in 40, that stands for 4 hour, for daily pivots, sorry. And if you enter 60, it will be 1 hour pivots. If you enter 240, it will be 4 hour pivots, and so on. If greater than 0, the indicator will use P amount of period minutes to calculate its lines. So Murrey period depends on the time frame. Okay. If you don't have indicator, guys, you can of course send me an email and I will send you Murrey indicator. Alif is asking, the Murrey is based on peak close price. It's actually periods. So yes, Murrey octaves will be based on periods and time frame, but mostly on P periods. Step back is a shift back. Usually we leave it at 0. Other parameters that are included with Murrey indicator will only affect visual parameters of the lines, so you don't need to pay attention to it. Stefan is asking, is the indicator Murrey part of MT4 on Admiral markets? Well, on MT4 it is not included, but of course, because I have it, you can also have it. So Stefan, please send me an email and I will send you Murrey indicator back. Of course, because you are Admiral Markets attendees and you are listening to my webinars, of course, I will share it with you. So just send me an email. And now this is where it gets interesting. Okay, this is what we need to pay attention to. Price is between 3.8 and 5.8. Murrey lines about 43% of the time. So it's similar in Camarilla, where the price tends to gravitate between L3 and H3 most of the time. So here there is 3.8 and 5.8 line. 3.8 is lower trading range, 5.8 is upper trading range. And the price will be gravitating between those two lines about 43% of the time. If the price moves beyond 1.8 or minus 1.8, then 95% of the time it will reverse. Of course, most scalpers and people who prefer to scalp like this method. So pay attention to plus 2.8, minus 2.8 if the price hits it. Usually you can make a good scalp, at least. So the levels of Murrey line describe the following. We will start from major reversal line. We have 4.8 that is basically a major reversal line, and we can call it a Murrey pivot point. So it's actually like daily pivot point or weekly, doesn't matter. It's a pivot point. Let's compare it to daily pivot point, because usually the price goes above, it will hit 5.8. Then if it goes to 6.8, it might reject. If it goes to 7.8, it's weak, it might not, or it can reject, and 8.8 is strong. Same is for below 4.8. Below 4.8, it will usually hit 3.8. If it goes below 3.8, it will usually hit 2.8. But if it hits 1.8, it can either reject or proceed further towards 0.8. And this is how it looks. Stefan is asking, how does MM8 relate to time scale, say trading in 4-hour M30? I will show that. But this is a Murrey session. So once we finish with price action trading school, we will be applying all the principles we have learned so far on our actual trading. So at this point, it's important to know just what Murrey math is. So it's not important. This is not a system now that I'm explaining. I'm explaining Murrey math, a deeper look into Murrey math, because these principles we will be using after price action training school finishes. It's important for you because all this previous and now moment knowledge you need to know about, because you will be using that on practical charts. So I then will not be needed to explain why is that so, why isn't that so, and so on. So I want you to teach all these principles that we have been learning on price action training school, because you will be implementing it to your price action trading method. That is practical naked trading. I'm teaching you, and I've been teaching you practical naked trading. So once you finish with the school, I won't be hearing questions, nor I really don't want to hear questions like why is that so, and so on, because this is what you need to master. If you are not sure about anything, of course you can always ask me, but I just don't want to mention 100 times simple facts. That is why we have very studious and very concise and clear price action training school, that each class you should master before moving on to next class, next session. That is important, guys. You should all know now about divergence, about T89, about patterns, about EMA 89, about Fibonacci. So you don't need anything more. When we finish with all these classes, you will apply that to practical naked trading. And we will have probably, I will see that probably each Wednesday, live trading webinars. But before that, you need to master this. That is why all these webinars are recorded, uploaded, and you can listen to it 1,000 times if you want. The question is, Alif is asking, why do you include indicators on price action trading? It should trade with raw candle lines. No, price action trading is not naked trading. It's not the same as naked trading. Practical naked trading that I've been teaching you in price action trading school is combination of candlesticks, trend lines, and very simple indicator. MACD, EMA, nothing more, nothing else. You need to have pivot point indicators such as Murrey math or Camarilla. But the thing is, you cannot just trade candlesticks. It won't do any good in long term. Practical naked trading is price action trading. And some indicators such as EMA or MACD are actually price action indicators. They are following the price. But we won't be making any entries with following the indicators. We will be using the knowledge of confluence points similar to what I do in the analysis for making entries. Imran is asking, this is for scalping. You can use this for scalping, but the main purpose will be intraday and intra-week trading. Price action trading school is teaching you the principles of price action. So this is not a system. Again, this is a webinar about Murrey math. Okay, so pay attention now to this chart, and here you can see how most of the time price will be congested in between 3.8 and 5.8. Now, usually if the price is opened here at 3.8, if it hits 4.8, it will sell, probably down to 2.8, then it will reject to 5.8, then it will go to 4.8 and follow the pattern. So Pre-mute trading area is the upper part, normal trading area is the middle part, consolidation trading area is the lower part. So you should be always paying attention to these lines. Weak line, 5-8, hard barrier, major, minor, all these important things are also written on Murrey Mat indicator itself. So all this, what you see here, is written. Now this is good for you if you want to snapshot. This could be good for you to actually see how Murrey Mat works on real-time charts. So this is good to have a snapshot because usually these patterns will be followed. Now it's the time for a live chart to see Murrey Mat how it looks like on the live chart. Okay, let me open it. Okay, give me a second just to find Murrey Mat here. Okay, Murrey Mat lines. Now I will go through the settings again. And here it is. Murrey Mat on New Zealand dollar. So it doesn't matter, don't look at time frame now, it's not important. It's important that you see first the settings. If you go to indicators list and here you will see settings. So as I said, default is P64. If you try to lower it, you might get a little bit different, but it could be that it won't be so accurate. See? Because of that, my personal choice is to leave it on default. That is actually 64, like this. So it's important. Now for other settings, you have Murrey Mat period. So it's actually time frame. You can place 240 on 15-minute time frame. So you see now you have 4-hour Murrey Mat octaves placed on 15-minute time frame. And that is a good thing because Murrey Mat usually follows the price pretty much accurately also with multiple time frame. So if we are watching 15-minute chart, we can use 4-hour Murrey Mat. It doesn't matter, it's up to your preference what is the best time frame. If you go on 5-minute, let's say you want to scalp, then I would place here 60 because you need to look at 1 hour. Of course, it's your choice here. What I do is I prefer 15-minute and having it on 4-hour Murrey Mat like this. Okay? See? It's much clearer now. So it's good to use it like this. Bando is asking where can we find the indicator. Just send me an email. As I said, maybe you joined up later, so you didn't hear me speaking. My email is tarantulafx@gmail.com and I will send this indicator to you. Okay, so this is how it looks like. Now this is what common MA patterns are. If it goes above 7-8 towards 8-8, 1-8, 2-8, there is a chance that market will reverse at these prices. One of the advantages of Murrey Met lines is, I'm using the old snapshot. I didn't make it personally, but it's very true, because you won't be actually buying here, nor you won't be selling there. Once you place the lines on your chart, it will be clear to you which kind of levels and zones are good for short trades, long trades, or no trading at all. Because if you see that the price is actually approaching those higher levels, you don't want to go long. So you don't want to go long here, and you don't want to go long here. What you want is actually to try to reverse the price. Okay? That is one of the advantages of Murrey Met. So these upper zones are zones where we should take sell trades, and lower zones are where we could actually go long. The strongest are plus 2.8 and minus 2.8, but also very strong are 8.8 and 1.8 and 0.8 and minus 1.8. So those are very strong levels. This is one of the examples how it looks. Now, always pay attention to what it says. If 2.8 is pivot reverse point, then we expect the price to actually reverse from here. Same is from 6.8. You see how the price is reversing. And as I already said, one of the advantages of Murrey Met is that you can place 4-hour Murrey Met lines on 15-minute time frame. That is usually the principle of multiple time frame. If you use 5-minute, you place it with 1-hour pivots. If you use 15-minute chart, you place 4-hour pivots. And that is exactly what we did here. 15-minute chart, see, 4-hour Murrey Met period. So strong levels are 8.8 plus 8, 2.8, where the price should reject, and 2.8, 0.8, minus 1.8, minus 2.8 is also where the price might reject, but to the upside. As I was telling you at the beginning of the webinar, you see here, the price was in between 3.8 and 5.8. So as soon as it hit 3.8, it tried to go towards 4.8. For 1 hour, your setting is 5 minutes. So you, for 1 hour, you play 60 here. And you go to 5-minute time frame, Kuram. For example, let's see today. Let's use the example from today. Let's see. I will use the example for today. From today, let's just give me a few seconds. Okay, we go to analytics, technical, and yes, as I said, pound dollar was close to important crossroads. Here on our analysis, the zone was 41.40 to 41.60. Initially, the price went here, rejected for some 30 pips, and then it broke below 41.40. And below, as I said, if the price goes below 41.15, it will go to test towards 40.50. On Murrey Met, you see, we also had 41.60 as important zone. And now we have here 4100. So this being said, it looks like both Camarilla and Murrey Matt were in agreement that 4160 was indeed strong zone. And you can see it here. We had 3 rejections here. See? 3 rejections here. And the last one was maybe the strongest. See? From the zone. It hit 42. So after I made analysis, it went from 4160 to 42, making like 40 pips. And then it didn't have the power to proceed. It broke to 4160 here and went down. You see where it stopped before proceeding more to the downside at 40.99. So actually you can see that very often you will see that Murrey Math goes very good in accordance with other analysis, such as let's say Camarilla or whatever else is. So those are strong lines, and we will be using it in our PNT trading. But as of now, you should pay attention to these slides, try to snapshot and try to watch, try to memorize this. Because this is how the price usually behaves. If it hits 8.8, ultimately it will go to 4.8 or 3.8. If it hits 6.8, it should retest 5.8. Here, see 6.8, 5.8, 8.8, look, 8.8, and it went here. Good question, Alif. Alif is asking, is the pivot change according to the price move like pivot point differently? Once these octaves are broken, it will print out new set of octaves. But as long as these octaves stay strong, and by that I mean if this doesn't overshoot above or overshoot below, these octaves will remain the same. So always watch for break of those octaves, always. Okay? Never ever try to buy here, no matter what you think it can be. This is for selling, this is for buying. We don't sell, we don't buy here, we don't sell here. So once the price breaks through plus 2.8 or minus 2.8, it will print out new levels. With FIBO, one would have to draw the indicator from high to low or low to high. I don't understand how to apply Murrey Math indicator. It's like pivots calculated from price history. Yes, Stefan, everything is calculated from price history. Fibonacci, right? Plus 1 plus 2 equals 3. Past plus present equals future. And most of the indicators, they draw information from price history. So how you apply it, you just place it on your chart. It's like a standard indicator. You just place it on your chart and it will print out these levels. It uses different calculation than pivots, but the principle is the same. It draws these lines from history, of course. So this is not Fibonacci. Stefan, don't be Don't think it's Fibonacci is definitely different. This is just an indicator. Of course, you can place Fibonacci here. For example, here. But it won't mean anything, let's say like this. The thing is, Fibonacci is used for entries, and this is used mostly for confluence points to see where the price could react or where to exit the market. Of course, this will keep you from selling here. No matter what I think, I wouldn't be selling here nor here. I would be waiting for a pullback to sell. So now this is what we will mention also. All markets will want to trade inside this 3 to 5/8 trading range. And it will be like 43.75% of the time. If the market goes up too far and moves up past its 2/8, then the Murrey mat will set it to next octave. That is what I said. Nuno is asking, how do you suggest to put the trades using sell by limit trades? Yes, I'm answering. The only way in my opinion for limit trades is at 1/8 or 2/8. Most important is 2/8. Those are limit trades. Because usually the price will reverse. We don't know for how much it will reverse, but it should reverse. Okay? So that is important. If a market cannot get above next octave, it goes, for example, at 8/8, but it cannot break the next octave, it will come back down inside its trading range. And that is called price equilibrium. Look, the market couldn't go above these lines. See how it rejected the price. And where it went back, look, to trade with the range. Yes, reverse a line, plus 2/8 or minus 2/8. See? It's important for you to know these things. Murrey Math can save your trade by telling you don't jump in a trade. The price is too low to sell it or too high to buy it. And once we finish with price action trading school, Murrey Math will be on our charts, where we will be conducting also one live trading session per week, including, of course, our well-known session recap. This will be something different. Of course, session recap will still go on because it's very good, popular, and it's important. But also, we will be having live webinars. That is my plan, to actually predict where the price might reject, trade during today or next day by using principles we learned in price action trading school. So the summary, guys, for now is we learned about Murrey Math. We learned the structure, practice MMA patterns, and play with different settings. I will go through these slides again so you can snapshot some of it. But guys, if you have any question, now this is the time for you to ask me. Okay? Alif is asking, when will you upload this on YouTube? Actually, I think I might be uploading this right after the webinar, so you can watch it again here. Stefan, no, this is not my email, Tarantula. This is my email, tarantulafx@gmail.com. tarantulafx@gmail.com. This is my email. Okay. So try to snapshot this. And of course, guys, if you have any questions, please do ask me now. This is important. As I said, these are the lines where we're looking for sell trades. These are the lines where we're looking for sell trades. Okay? Not below this, sorry, for buy. This is where we look for sell. This is where we look to buy. Below this, market will print out new set of octaves. Yes, Stefan. In fast moving markets, what I do usually is I reapply it. So if I see that the price is fast moving here, if it doesn't get refreshed, I just go here like this, click it 2 times, okay, close, and it will refresh. So that is how I do it. See, the market is very low now. Here, 15 minute is 240. On 1 hour, you can also do it like this. And yes, guys, when you apply new pair, it's always good to actually refresh it like this. Just go and refresh it. It is how this works. Now, if it breaks here, it will print out new octaves, but then we do it like this. Okay? So I usually use for intraday time frame, this is my preferred setting for intraday time frame, 240. This is for intraday. And it can be also used for intraweek, but it's usually intraday. I usually leave it on 64, and with this you can actually apply on intraweek because it will stay the same for a couple of days. So this is the optimum, 240. Okay. Okay, yeah, question. The Murrey mat and pivot point indicator are almost the same. Do you test it or have any idea? Alif, I'm not sure about which kind of pivot point. The Murrey mat is similar to which pivot point, please? I need to know because this is not the same as Camarilla. This is different. So it's not the same as Camarilla. The principles are different. They may look similar to you, but the thing is they are different, and Camarilla does not use so many levels. So I'm not testing this. I know about Maramat, so I'm just trying to explain what Maramat idea is and how you should watch the price, where the price could reject and where you should stay out of selling. Would you really sell pound dollar now? No matter what, even if it starts to drop, I wouldn't sell it. Because the main principle of price action is buying low, selling high. We could sell it where I pointed out in the analysis. Well, now not referring specifically to Murrey Math, but what I did say in the analysis, 41.15. When that level was broken, we could try to watch for a happy trigger happy trade or breakout retest trade. Andrew is asking, does it work on all time frames? Yes, but important to know is actually the setting. Okay, the important thing is actually the setting here. See, on short time frames, you should put 60 period, and you can go to 5-minute chart. For intraday to intraweek, it's 240. You can also go to weekly, daily, and you need to apply for different. I never do that, but maybe if you're a long-term trader, this is how you can set it. For daily pivots, 1440. For weekly pivots, you see, 10, 080, and 43, 200 for monthly. Usually, if you go with weekly or monthly pivot points, you will be trading on 4-hour or daily time frame. So that's it, yeah. Okay, guys, I don't see any further questions. So as I said, practice this, please. Next price action trading school is new candlestick patterns. So something that you probably don't know of. There will be 3 different candlestick patterns that we will take a look at and that we will be using in actual trading. Yes, Maciej, doesn't matter. I will remove it. Thank you. So thank you for reminding me. Okay, guys, everything is good. Stefan is saying he will drop an email. Sure. Greetings from Munich. Greetings to Munich and Germany, Stefan. So, yep, everything is fine. Just email me for indicator and you will get it, of course. Let's see. Tomorrow we have another webinar. Tomorrow is mutual webinar with Chris. So, guys, as always, cheers and trade safe.